It's the middle of the night. Most of the world is fast asleep, but in the high-stakes world of global finance, things are anything but quiet.
Here, wave after wave of selling hitting the market.
It was a day when the Bank of England lost billions and speculators.
Markets are in chaos, phones are ringing off the hook, and one man, George Soros, is about to make history. In a matter of hours, he will pull off one of the greatest financial moves of all time, earning $1 billion by breaking the Bank of England. How did he do it? What made Soros see what no one else could? And what kind of power does a man need to bring a nation's currency to its knees? This is the story of the trader who made $1 billion in a single night, a move so legendary, it still haunts financial markets today. To truly understand how one man made $1 billion in a single night, you first have to know where he came from. George Soros didn't start his life anywhere near Wall Street. In fact, he was born in Hungary in the midst of a world teetering on the edge of chaos. His early years were shaped by survival, as he lived through World War II and the Nazi occupation, a period that would leave a lasting mark on his view of life and money. From a young age, Soros understood the importance of adapting to changing circumstances. This ability to see the bigger picture would later become his superpower in the financial world. But let's fast forward a bit. After fleeing post-war Hungary, Soros eventually landed in London, where he studied economics and began his journey into finance. It wasn't glamorous at first. Picture a young man working odd jobs just to stay afloat while dreaming of something bigger. Slowly, he found his way into the world of investment banking, where he sharpened his understanding of markets and human behavior. He wasn't just learning numbers and charts, he was learning how people's decisions, fears, and greed drove the economy. What set Soros apart was his ability to think differently. While other traders focused on short-term profits, Soros took a step back and analyzed global events, politics, and currencies like pieces on a chessboard. He believed that markets were often wrong, wildly overvaluing or undervaluing assets because of mass psychology. And if you knew how to spot these miscalculations, you could make fortunes. By the time Soros founded his hedge fund, the Quantum Fund, in the 1970s, he was already turning heads. He made bold bets on international markets and earned enormous returns for his investors. But he wasn't satisfied with just making money. He wanted to challenge the very foundations of economic theory. To him, finance wasn't just a business. It was a battlefield where the smartest and most daring players could rewrite the rules. This mindset would eventually lead Soros to his most famous move, a calculated strike on the British pound that would shock the world. But before we get there, we need to understand the chessboard he was playing on. One filled with high stakes, global politics, and the crumbling structure of European economies. This was Soros's arena, and soon he would prove just how powerful a single trader could be. To understand how Soros pulled off his billion-dollar move, we need to go back to the early 1990s, a time when Europe was trying to stabilize its economies through a system called the European Exchange Rate Mechanism, ERM. Sounds fancy, right? But here's the short version. European countries wanted their currencies to stay within a tight range of each other's value. This was a crucial step toward creating a single currency, the euro. The idea was simple. By linking their currencies, they could reduce uncertainty in trade and investments. But there was a catch. If a country's currency faced pressure, like inflation or economic instability, it couldn't just devalue or adjust freely. It had to stay locked in that system, even if it meant disaster. And this is where things started to go sideways for the UK. Britain's economy was struggling, inflation was eating away at growth, and high interest rates were choking businesses and homeowners. On top of that, the British government had tied the pound to the ERM at an exchange rate that many experts thought was too high. The pound was overvalued and the markets knew it. But here's the twist. The British government was stubborn. They were determined to defend the pound at all costs, believing that pulling out of the ERM would destroy their credibility. Now, Soros saw what others were either too blind or too scared to admit. The British government was fighting a losing battle. The signs were everywhere. The economy was slowing down, unemployment was rising, and confidence in the pound was evaporating. Investors started whispering that the government would eventually crack under pressure, but no one dared to make the first big move. No one, except Soros. With his sharp understanding of macroeconomics, Soros saw this as an opportunity of a lifetime. He didn't just think the pound would fall, he knew it. He understood that no matter how much money the Bank of England threw at the problem, they couldn't stop the inevitable. The cracks were widening, and Soros quietly began preparing to bet against the British currency. Behind the scenes, Soros's quantum fund started amassing a massive short position on the pound. This wasn't just a small trade, it was a financial blitzkrieg. He was about to take on the Bank of England, a centuries-old institution, and force it to its knees. The tension was building and the financial world was holding its breath. Little did anyone know, the clock was ticking down to a night that would change economic history forever. This is where things get intense. Soros wasn't playing small. He was about to make one of the largest currency trades the world had ever seen. And here's the crazy part. He wasn't betting on a company or a stock. He was betting against an entire country's currency, the British pound. If he was right, he'd walk away with $1 billion payday. If he was wrong, he could sink his entire fund. This wasn't just high stakes. It was a financial all-or-nothing gamble. Now let's break down what Soros did. He used a strategy called short selling, which basically means betting that something's value will drop. In this case, Soros believed the pound was overvalued and couldn't hold its exchange rate within the European system. To short the pound, he borrowed large amounts of it from other institutions and sold it at its current high price. The plan? Wait for the pound to crash, buy it back at a much lower price, and return what he borrowed, keeping the difference as profit. But this wasn't just any short sell. Soros didn't quietly make a few trades and hope for the best. He went all in. His fund moved billions of dollars in the market, causing ripples that were impossible to ignore. The financial world started to buzz. People whispered that Soros was making a massive bet against the Bank of England itself. The British government wasn't going to take this lying down. They had two options: either let the pound devalue, effectively admitting defeat, or fight to the death to defend it. They chose the latter. The Bank of England poured billions of dollars into buying up the pound to prop up its value. They even hiked interest rates, trying to attract investors to hold on to the currency. But Soros didn't flinch. He knew that no matter how much money they burned, they couldn't fight the market forever. As the hours ticked by, more and more investors caught wind of what was happening. They started to follow Soros's lead, dumping the pound. It was a run on the currency, and the Bank of England was being overwhelmed. Every dollar the government spent defending the pound was disappearing into the market like water down a drain. And Soros? He calmly watched it all unfold, knowing the collapse was inevitable. The tension reached a boiling point. The financial world held its breath. Would the Bank of England fold, or could they hold the line? The answer would come soon, and it would shock the world. It's September 16th, 1992. A night that would go down in financial history as Black Wednesday. The tension in London is suffocating. In the offices of the Bank of England, chaos reigns. Phones are ringing off the hook, advisors are frantically debating strategies, and high-ranking officials are sweating through their suits. The British government is facing an unprecedented crisis. The pound is in free fall, and their last-ditch efforts to save it are unraveling by the second. Meanwhile, George Soros and his team are calm. It's just another night at the office, except they're sitting on a potential billion-dollar trade. While others panic, Soros watches the situation unfold with the detached focus of a chess grandmaster who knows he's already won. His fund has sold off billions of pounds, forcing the currency's value to plummet.
It was in excess of $1 billion of profits.
Each move the British government makes to defend the pound only deepens their losses and strengthens Soros's position. The Bank of England raises interest rates to a jaw-dropping 15% in a desperate attempt to attract investors to the pound. For context, that's like offering an emergency brake on a train that's already derailed. The move is supposed to signal strength and control, but it's too late. The market smells blood. Investors around the globe are dumping the pound faster than the Bank of England can buy it. Soros knew this would happen. The British government had locked itself into a no-win situation. On one hand, they were trying to prevent the pound from devaluing, but on the other, their economy couldn't sustain the aggressive interest rates and financial pressure for long. It was like trying to hold back a tidal wave with a sandcastle. As midnight approaches, the reality becomes impossible to ignore. The Bank of England is running out of money to prop up the pound. Every intervention has failed. They're left with no choice but to surrender. Early the next morning, the British government announces that the pound is withdrawing from the European exchange rate mechanism. It's a crushing blow to the nation's economic credibility, but for Soros, it's a moment of triumph. Within hours, headlines flash around the world. The Bank of England has been broken. Soros has made a profit of $1 billion in a single night. It's a move so audacious, so monumental, that financial markets are shaken to their core. Traders, economists, and politicians are stunned. How could one man bring a major country's currency to its knees? But Soros didn't just break the pound. He broke the illusion that governments were all-powerful in controlling markets. His victory showed that if you understood the flaws in the system and had the guts to act on them, you could rewrite the rules. That lesson wouldn't be forgotten anytime soon. While Soros celebrates his windfall, the British public wakes up to the harsh reality of devaluation. The pound has lost its value, businesses face uncertainty, and political fallout is imminent. Soros's name is now both feared and revered. He is the man who broke the Bank of England, a figure forever etched into the annals of financial history. And this was just the beginning of the global debate about the power of financial markets versus national governments, one that still rages on today. When the dust settled after Black Wednesday, the British economy was left reeling. It was like waking up after a storm had ripped through the country, except this storm wasn't made of wind and rain. It was made of collapsing financial confidence. The government's bold attempt to defend the pound had failed spectacularly. Billions of pounds had been spent in a futile effort to hold the currency's value, and now the British people were the ones stuck with the consequences. Let's talk about those consequences. First, the pound's value dropped significantly. On the surface, that might sound terrible, right? But here's the twist. Some parts of the economy actually benefited. A weaker currency made British exports cheaper and more attractive to foreign markets. Suddenly, manufacturers and exporters found themselves in a better position to compete globally. In fact, over the following years, parts of the UK economy recovered faster than expected, thanks to increased trade. But for ordinary citizens, it wasn't all silver linings. Inflation fears loomed, and confidence in the government's ability to manage the economy hit rock bottom. People began to question the very institutions that were supposed to safeguard the country's financial stability. How could one man, an outsider no less, break the system so easily? It sparked a wave of anxiety about the power of global financial markets. If a single trader could bring down a currency, what else could happen? Politically, the fallout was brutal. The ruling government, led by Prime Minister John Major, was humiliated. Black Wednesday became a symbol of their economic incompetence. The opposition party seized on this failure, using it as ammunition to rally public support. Trust in the government's economic policies eroded overnight, and it would take years to rebuild any semblance of credibility. But this wasn't just a British problem. Across Europe, other governments took notice. The collapse of the pound raised serious doubts about the future of the European exchange rate mechanism. If Britain, one of the continent's major economies, couldn't hold the line, what did that mean for other countries? The incident exposed deep flaws in the plan for European monetary unity. It was a wake-up call that reshaped the discussions leading to the eventual creation of the euro. And then there was Soros himself. To some, he was a genius who had simply played the game better than anyone else. To others, he was a villain, proof that financial markets had too much unchecked power. Conspiracy theories began to swirl around him, painting him as a shadowy figure manipulating world events for his own gain. The truth, of course, was more nuanced. Soros hadn't broken the pound out of malice. He'd recognized a structural weakness in the system and exploited it. In his mind, he wasn't the cause of the crisis. He was simply the one who saw it coming. But perception is everything, and Soros's reputation became a lightning rod for controversy. His actions on Black Wednesday cemented his place as one of the most influential and divisive figures in modern finance. He would go on to fund philanthropic causes and political initiatives around the world, but the shadow of that billion-dollar trade would follow him wherever he went. The lesson was clear. In the modern global economy, the power balance between governments and markets had shifted. National currencies were no longer untouchable. Traders, hedge funds, and financial institutions now had the ability to challenge even the most established economic systems. The question that lingered in everyone's mind was this: if the rules of the game had changed, who would control the players? And could any government truly protect its people from the whims of the market? These are questions that still haunt the world of finance today. Black Wednesday was more than a financial crisis. It was a warning. And George Soros was the man who sounded the alarm in the most dramatic way possible. After Black Wednesday, George Soros was no longer just a successful hedge fund manager. He became a living legend, both admired and despised. His billion-dollar move against the British pound had cemented his place in the history books, but it also sparked intense debate about the role of financial power in global markets. Soros didn't just break the Bank of England, he broke the illusion that governments had absolute control over their currencies.
It's quite clear the government was not in charge of events.
I had no doubt we were in the middle of the
And that revelation sent shockwaves across the world. For the financial community, Soros became a symbol of mastery. Traders, analysts, and economists studied his every move, trying to decode his strategy. How did he see what no one else could? How did he know when to strike and when to hold back? His success wasn't just luck, it was a combination of deep analysis, bold risk-taking, and a profound understanding of human psychology. Soros became the ultimate example of how one person could reshape global markets through intelligence and nerve. But outside of finance, the narrative was more complicated. To many, Soros was seen as a ruthless profiteer, someone who exploited economic weaknesses for personal gain. Conspiracy theories began to swirl, painting him as a shadowy puppet master orchestrating world events. Over time, Soros's name became synonymous with controversy, especially as he became increasingly involved in philanthropy and politics. He funded initiatives promoting democracy, human rights, and education across the globe, causes he genuinely believed in. But to his critics, these efforts were seen as attempts to exert influence under the guise of charity. The truth, of course, lies somewhere in the middle. Soros's legacy isn't black and white. Yes, he profited immensely from market instability, but he also used his wealth to address social and political issues he found urgent. He once said he saw himself as a kind of economic physician, diagnosing and treating imbalances in the system. Whether you see that as noble or opportunistic depends on your perspective. What's undeniable, though, is the impact Soros had on the financial world. Black Wednesday shattered the myth of government invincibility. After Soros, traders and hedge funds were emboldened to challenge currency values and national economic policies. Countries had to adapt, creating stricter regulations and more robust financial systems to prevent another crisis. In a way, Soros forced governments to rethink how they manage their economies in a world where capital could move across borders at lightning speed. And yet, despite his fame, Soros remains a paradox. To some, he's a hero who exposed flaws in an overconfident system. To others, he's a villain who profited at the expense of ordinary people. His legacy raises profound questions about capitalism, morality, and the balance of power in global markets. Should traders have the ability to bring down a nation's currency? Can the financial system ever be fair when so much influence is concentrated in so few hands? One thing's for sure, Soros's story is far from over. His influence is still felt today, not just through his investments, but through the countless debates he has sparked about wealth, power, and responsibility. The man who broke the Bank of England didn't just shape the markets, he changed the way we think about them. And that's why his name, love him or hate him, will be remembered long after the $1 billion he made that night has been spent and reinvested 100 times over. George Soros's billion-dollar victory wasn't just about making money, it was a masterclass in strategy, risk management, and understanding the world beyond numbers. Whether you're a trader, an investor, or someone just trying to survive the financial system, there are powerful lessons hidden in his legendary move. And these lessons aren't just for hedge fund managers, they apply to anyone who wants to succeed in high-stakes environments where the odds seem stacked against them. First, know the bigger picture. Soros didn't wake up one day and randomly decide to bet against the British pound. He had been watching Europe's economy for years, analyzing its strengths, weaknesses, and the flaws in the European exchange rate mechanism. He understood that the UK's economy wasn't strong enough to maintain the pound's artificially high value. While most investors focused on short-term trends, Soros took a step back and saw the cracks forming in the foundation of the entire system. The lesson here? If you want to win big, you need to understand not just what's happening today, but what's likely to happen tomorrow, and why. But knowing isn't enough. You also have to act with conviction. When Soros saw his opportunity, he didn't hesitate. He placed an enormous bet against the pound, fully aware that if he was wrong, it could destroy his fund. That's the kind of confidence that only comes from deep preparation and understanding. Most people would have second-guessed themselves or played it safe, but Soros trusted his analysis. In life and in business, there are moments when you have to go all in. Playing it safe might protect you from small losses, but it also keeps you from seizing life-changing opportunities. However, this isn't about recklessness. Soros's move was calculated, not impulsive. He managed his risks. He didn't just bet on one scenario, he positioned himself in a way that minimized his downside if things didn't go as planned. This is crucial. In any high-stakes decision, it's not just about chasing reward, it's about protecting yourself from catastrophic failure. Soros knew the limits of the Bank of England's ability to fight back, which gave him the confidence to stay in the game even as the government threw everything it had at him. Another key lesson is understanding market psychology. Soros knew that markets aren't always rational, they're driven by fear, greed, and herd mentality. He used this to his advantage. Once he made his move, other investors began to panic and follow suit, accelerating the collapse of the pound. Soros didn't just predict economic trends, he predicted how people would react. In any competitive field, understanding human behavior can give you a massive edge. But perhaps the most important lesson is this: the system isn't as invincible as it seems. We often think of governments, institutions, and markets as untouchable giants. Black Wednesday shattered that illusion. Soros proved that even the most powerful systems have vulnerabilities. The same applies to life in general. Just because something seems unbreakable doesn't mean it is. If you can find the weaknesses in a system, you can rewrite the rules. Of course, with great power comes great responsibility. Soros's move sparked global debate about the ethics of profiting from financial crises. Some argue that traders like him should be held accountable for the damage their actions can cause. Others believe that if governments build faulty systems, it's fair game for anyone smart enough to exploit them. This raises a tough question. Where should we draw the line between opportunity and exploitation? Regardless of where you stand on the ethics, Soros's story offers a powerful reminder. The world is shaped by those who understand how it works and have the courage to act. You don't need to be a billionaire to apply these lessons. Whether you're investing, building a business, or navigating life's challenges, success often comes down to seeing opportunities others miss and having the guts to go after them. So, what opportunities are you overlooking right now? The next billion-dollar move might not be in the financial markets, it could be in your own life. Are you ready to spot it and make your move? George Soros's billion-dollar move wasn't just a financial masterstroke, it sparked a fierce debate that rages on to this day. Is Soros a hero who exposed the flaws in a broken system, or a villain who profited from the suffering of an entire nation? It all depends on who you ask. On one side, there are those who see Soros as a brilliant strategist. To them, he didn't create the crisis, he merely revealed it. The British government had overvalued the pound and locked itself into an unsustainable system. The economy was already on shaky ground. Soros just saw the writing on the wall and made his move before anyone else. In their eyes, blaming Soros is like blaming a firefighter for pointing out that your house is on fire. And let's not forget the ripple effect. By forcing the pound to devalue, Soros arguably helped the UK economy in the long run. With a weaker currency, British exports became more competitive, which boosted trade and helped certain industries recover. Some economists argue that the government's stubbornness was the real villain in this story. If they had devalued the pound earlier, the crisis might have been avoided altogether. But let's flip the coin. To many others, especially in Britain, Soros is the ultimate bad guy, a financial predator who exploited a nation's vulnerability for personal gain. Think about the ordinary people who suffered in the aftermath. Inflation fears skyrocketed, businesses struggled to adjust to the currency devaluation, and trust in the government was shattered. To those affected, Soros wasn't a hero uncovering the truth. He was a ruthless opportunist who cashed in on their misfortune. This moral debate extends beyond Soros himself. It touches on the broader issue of how much power financial markets, and those who control them, should have over national economies. If a single trader can bring down a currency, what does that say about the system? Should there be more safeguards to prevent this kind of manipulation? Or is this just how capitalism works, survival of the smartest and boldest? Soros's later actions added even more fuel to the fire. He became one of the world's most prominent philanthropists, donating billions to causes like education, human rights, and democracy. But his philanthropy didn't silence his critics. In fact, it made some of them more suspicious. They saw his charitable work as a way to whitewash his reputation, making up for the damage they believed he had done in the financial world. And then there's the conspiracy machine. Over the years, Soros has been the target of countless wild theories, portraying him as a shadowy figure pulling the strings of global events. These narratives have been spread by those who distrust the elite, financial institutions, or even globalization itself. The irony is that Soros, despite being a billionaire, has also been critical of unregulated markets. Yet, to some, he embodies everything wrong with the concentration of wealth and power. So, who's right? Is Soros a hero or a villain? The truth is, he's neither, nor both. He's a complex figure operating in a complex world. His billion-dollar move wasn't motivated by malice, but by opportunity. He played by the rules of the system, but his victory exposed just how flawed those rules were. In many ways, Soros's story forces us to confront uncomfortable questions about wealth, power, and morality. At the end of the day, whether you see Soros as a genius or a menace might say more about your own beliefs than about the man himself. Do you see the world as a competitive arena where the smartest players deserve to win? Or do you believe that unchecked financial power needs stronger accountability to protect the vulnerable? The answer isn't simple, and maybe that's the most important lesson of all. Sometimes in the world of high finance, there are no clear heroes or villains, just players navigating a game with incredibly high stakes. The question is, if you had the chance to rewrite the rules, would you play differently? If you found this video enlightening, don't forget to like, share, and subscribe. Your support helps the channel grow. Click the next video for an even more intriguing untold story from the world of business and finance. See you all in the next video. Thanks for watching.